It is D-Day, special day, budget day. Ukur Yatani's maiden budget speech, 2.7 trillion shillings of it, a deficit of about 806 billion shillings. Where will it come from? By his own words, he says he's never seen a country that develops without loans. But the question is, are they concessional loans or are they commercial loans? That is the big question that we're going to deal with today. There's been a lot of budget cuts in different sectors, but before we get into those details, let me introduce my guest. Real quick, beginning from my immediate right, Philip Mwema, Managing Partner, Anderson Tax. Thank you so much for making time this morning.
Most welcome, Trevor.
Asante sana. Churchill Ogutu, Head of Research at Genghis Capital.
Thank you, Trevor.
So much for coming in.
Thanks.
And later on, we'll be speaking to Anthony Mudusi, the tax partner, as well as Ernest Andy Young. He'll be joining us via Skype later on in this broadcast. Let's get straight into this discussion just right now. And Philip, I'll start with you. Preliminary, 2.7 trillion shillings of a budget. What are your preliminary thoughts? Are we living beyond our means? Does it address the pandemic issues? Because there are many people are saying it doesn't address the current need of the country.
I mean, we started living way beyond our means, I think, during the second term of the Jubilee administration. That's the reality, okay? And if you look at the 2.7 trillion budget that has been presented, to put it in context, as a country, as at March, our public debt was about 6.3 trillion, 50% of which is about external credit, okay? And our debt servicing as a country is about 905 billion. You put it right, we have a deficit of 823 billion. We stretched the tax measures, okay, to the extent that you cannot stretch it any further.
Yeah.
Tax collection, what KRA is expected to collect in the financial year 2020-2021 is about 1.6 trillion. Okay?
Yeah.
Numbers don't lie. I'm an accountant. Our budget is 2.7. I'm collecting 1.6. This 1.1 trillion, where do I get it from? I've got to borrow.
Yeah.
Because I've already extinguished the tax measures to collect from Kenyans. We've only allocated about 54 billion to deal with COVID-19. Please remember, 2.7 trillion is overall. We've only allocated 54 billion onto COVID-19 measures. I don't envy the CS as he reads his budget statement today. And reason being, he has a delicate balancing act that he's got to continue borrowing within the marketplace. So I expect to see 2021 having a crowding out effect of monies within the local market, because if he borrows locally, the interest rate will skyrocket, because TB rates, as you and I know from a government perspective, the government is solid. It is risk-free, so to speak, as we speak in economic terms, meaning as a banker, I better lend to Trevor, to government, other than Trevor. Trevor is high risk.
Yeah.
Government is secure. So it's a very delicate balancing act for the CS.
Yeah.
And then you're looking at a context whereby in 2019, and we all thought 2019 was a terrible year, we created about 846,000 jobs. In the last 2 months, we've lost just about 500,000 jobs in the last 2 months.
Yeah, in fact, those were putting it at 1.7.
I want to be a bit positive and don't look at the grim picture. The statistics and numbers, it's just about 500,000 jobs that have been lost in the last 2 months.
Okay.
So against what we created last year, 843. So it's going to be, we have to brace ourselves for tough times ahead. And those are my comments.
All right. What do you think? Because I know there's a Genghis Capital did research on Prime for the year 2020-2021 budget. I was actually looking at it. What was the most surprising thing you found out there?
Well, Trevor, this 2020-2021 budget is full of contradictions, as what Philip has elucidated earlier on. One of the things we are looking at, of course, there's the backdrop of COVID-19 pandemic, and looking at even the measures that Treasury or even the government, at least the focus should have been to try and spur the economy going forward. But even looking at the numbers, nothing is telling us anything is being put forward, at least to stimulate the economy going forward. And for one, you're looking at the national government expenditure. There's a drop by 75 billion to 1.9 trillion shillings. But then again, on the other side, consolidated fund services has spiked up to 1 trillion. So we are saying that there are those contradictions that's coming up. And by the way, the overall budget is not even 2.7 trillion. That 2.7 trillion is even net of some of the redemptions, but redemptions is part of what we need to pay back. So I'm looking at 3.2 trillion, the overall budget, including even the redemptions for the bonds, domestic bonds and the external bonds that we have. And all this is due to the debt that we keep on going to. Another thing is also, yes, there's that reduction in the revenues. From the initial revenue target for the next financial year was 2.1 trillion shillings. And because of the impact of the Tax Laws Amendment Act that came at the tail end of April, and also in light of COVID-19, that went down to 1.9 trillion, the overall revenues, of which the ordinary revenue was around 1.6 trillion. But then again, looking at the context of COVID-19 pandemic, jobs have been lost, businesses are suffering. So even that 1.6 trillion, it's realism. It's quite debatable whether we'll be able to hit it. And then we'll circle back to what we've been seeing year in, year out, revenues underperforming in the course of the financial year. And that's what we are likely to see in the next financial year. And it could lead to further public debt, increase in public debt accumulation. So the thing to do it, we need to cut our cloth according to our size, cut to our coat according to size, such that rather than having a ballooning in expenditure, we need to be a bit realistic in our spending targets. So that was quite key to me.
Okay.
This year, in my humble view, our GDP growth will be about 1%. So our economy is...
Ukuri is more optimistic. He's saying about 2.5%.
I'm looking at 1%. And next year we can look at the numbers. 2.2%. It's a bit too ambitious in this day and age. Then you've got these numbers that are there. Our recurrent expenditure. So we go 1.9 trillion as government spent in 2021. Out of the 1.9 trillion, 1.25 trillion, slightly just about 65 to 70% is on recurrent expenditure. Salo na kadhalika. And you've only allocated about 637 for development expenditure. We should be putting in more on the development expenditure to kickstart the economy. If you look at the tax measures, because the finance bill was put in place, I'm baffled. You putting in VAT, the very annoying tax, or the value-added tax, onto farm input. Meaning, the cost of farm input will increase. You put in VAT on pesticides and fertilizers. In a country whereby we have not finished the issues of locust heaters, huge. We've had the issue of unpredictable weather, so farming is a challenge. We are looking at a place where the cost of production is high and there is low market for the produce of small-scale farmers. In a context whereby our neighbors wanasema watwangweni kabisa, tutatwangwa kabisa. So our food security is a challenge. Yet here you're putting in VAT on farm input, increasing farming against a backdrop whereby as a country we say agriculture is the backbone of this economy, contributing about, 24-25%? Should we then not be giving in more incentive into the agricultural space, so at least even post-COVID-19, we're able to feed our people?
Yeah.
I struggle with the looking at this in totality, driving it from a tax perspective to try and collect revenue in a backdrop where we are really on a rock bottom as a country.
Yeah.
The balancing act for me.
That's a balancing act that I want Churchill to also delve into. Churchill, you mentioned that right now we should have focused more on spurring the economy. The latest figures that we have was about 53.7 billion. The Treasury CS says that including all the measures, we're talking about 170 billion intervention in terms of the stimulus package. Is that the right direction to go from where you stand? Is that enough, or was it done in the wrong way?
The 53.7 billion is not enough, in my view, not even looking at it on an aggregate level. If you compare with other developed markets, they are doing stimulus packages close to 2%, 5% of their GDP. But ours is paltry 0.5% of the GDP. So it will be a magician's wand, in my view, to see that there could be some stimulus coming out of this package that has been put out. And even looking at the numbers, we are looking in terms of the employment, there's that Kazi Mtaani. The target is around 200,000 jobs. We're not sure what policy measures were put in place, or what was the thought process around it, such that we can get those numbers, or behind those Kazi Mtaani. There's some which, in my view, I see are temporary. Things like hiring 5,000 interns to the public health sector. So I think that's just a temporary measure. It's not something that is stimulating to the economy. And looking at the numbers for the unemployment, because right now, at least we are in a place whereby we get some of these numbers on a periodic basis. It used to be, we've come a long way. Because before you used to get the numbers, we just used to rely on the economic surveys after 1 year. At least now, Kenya National Bureau of Statistics has come up with mechanism whereby we can get the unemployment data on a quarterly basis. And the last data we had is at the first quarter, which came out late last month. And we're seeing that already there's that negative impact. And by the time COVID hit our country, we were just at the second half of 1 month. So the second quarter data for unemployment will be quite ugly. And we are looking at even, there's 500,000, we are looking at even close to 1 million or 3 million jobs that will be lost in the current quarter. And looking at the stimulus package in terms of the employment to be made, I think on the higher side, I'm looking at 300,000 in 1 year. That's still not something that will stimulate the economy. Yeah. Some jobs have been lost, particularly in the tourism sector, hospitality sector, and aviation sector, transport sector. Those ones, I'm not seeing it how it's been captured in the economic stimulus package. So, in my view, more has to be done to support the businesses.
You're not very happy with this economic stimulus as well? Or do you think more should have been done?
No, more should have been done in the economic stimulus. Yeah. And then, what's our new norm right now? We've all gone into online because that's a new norm because of COVID-19.
Yeah.
And just even before we blink and settle on the new norm on online, then there's a proposal to introduce a digital services tax on even before the baby crawls, you hit on the digital services tax onto that. So on the DST, that will affect the Ubers of this world, the Jumias of this world. I mean, and in that space, they are already struggling. If we look at the various sectors of the economy, so agriculture is the first one.
Yeah.
It's estimated we'll lose about 60-odd billion by the end of 2020. Coffee, tea, fruits, dismal performance. Okay? Then we haven't even touched on our tourism and hotel industry. We've shut down the country, rightly so, because of COVID-19.
Yeah.
The international travel, Mara is dead. Coast is dead. Now, that's just on the tourism space. If you look at the restaurants, the hotel industry, it's all closed. Means your waiters, your baristas, the guys who do cleaning, that entire ecosystem is out.
Yeah.
And that's the ecosystem that you are targeted to give them the 24,000 shillings as a result of the get them out of the PAYE, get them all the PAYE ban.
Yeah.
They are no longer in formal employment. What does that mean? The stimulus package should be enhanced to target and assist our citizens who are already out of a job, and we should be looking at how quickly can we reopen so they get back into gainful employment. Remember, Kenyans love working hard. Huh? I mean, we're not lazy. We love working. We love working. So for me, just basics looking at that entire hotel industry.
Yeah.
It's a huge hit. Then the transport sector.
So does it then make sense to throw in 3 billion shillings as an economic stimulus package to the hotel industry, knowing that they're operating at 0% capacity right now? Is there a return on investment on that? Or should the money have been put somewhere else?
No.
Because we know there's about 2 billion to support the hotel industry, 1 billion to engage 5,500 community scouts, and another 1 billion for 160 community conservationists. So it's about 3 billion shillings. Is that the right place to put the money?
I mean, at this point in time, you don't look at the return on investment in the hotel industry. They need our help. They need help from government.
So this is simply to stay afloat.
To stay afloat. At this point in time, this is just to help them stay alive, stay in play. Because right now, they are not in play.
Yeah.
So for me, the 3 billion allocated to that sector is great. But we need to get into a mechanism whereby through the Huduma, we got Huduma numbers. Yeah. These Huduma numbers that we got, this is a time to apply the Huduma numbers and to get the people who actually require the support in the hotel sector, for example, targeted approach and get them to support and stay alive.
But where does the money come from, Wema? That is the main question that even the president keeps asking everyone.
The money, I mean, look, if we have 1.25 trillion on recurrent expenditure on government, okay, we need to cut fat in our public service. We need to be bold. Our public service is bloated.
Where does the money come from, Wema? That is the main question that even the president keeps asking everyone.
The money, I mean, look, if we have 1.25 trillion on recurrent expenditure on government, okay, we need to cut fat in our public service. We need to be bold. Our public service is bloated. We need to cut those numbers. Save that fat from a bloated public service and reallocate that into people needs. And then remember, the Bretton Woods institution, be it the World Bank, I saw they gave us some 523. We've got money coming from the World Bank. So the monies that are coming in specifically for COVID-19, we also need to have accountability. Where have these funds been expended, and have they reached the targeted audience on where it was meant to be? We do have the money as a country. The economy is moving. We just need to cut public spend on our public debt, and then also deal boldly with a monster called corruption, because that chops off about 30% of what comes in in terms of from a collection perspective. Chop that off, and once you become that lean and efficient as a country, you're home and dry. If we look at, because there's a point that CS talked about recession. Yeah. When we last had a recession, it was in 2009, if I remember correctly. But I think let's just rejig back and look at history, because we are behaving like COVID-19 is a new thing. We've had global pandemics. If you remember the Spanish flu, 1918 to 1919 or thereabout, which wiped out, 20 to 100 million people globally. Then we had the Hong Kong flu, then moved to the Asian flu, then the swine flu that came into place, then COVID-19. COVID-19, obviously, it's worse as compared to the Hong Kong flu, and despite what mitigating efforts we've had globally, and that then put into play the issue for a recession. We had a recession in 2009, Trevor. I hope you remember you were alive at that point in 2009. And that recession, just to give you some aid memore, we had foreclosures, bankruptcy, household defaulted on mortgage payments, and we had the banking crisis. Okay? The bankruptcies, there's liquidity, the issue of unemployment came up, credit was available, and we skyrocketed in 2009. Now, if you look at the economy impact of 2019, investment has gone down, remittances, diaspora, the dollars come into place, dropped about 50%. Schools are closed. Think about that. Huh? Schools are closed. Teachers, the learning institutions. Remember, teachers also need to be paid salary, but schools are closed. So, and not everyone is on the online program, because I wish we had kept our promise and given laptops to children. COVID-19 prepared us. Would be very well prepared for COVID-19. Some realities. Unsustainable cash flows, be it on SMEs, institutions, there's no cash flows. Right now, you'll see Kenyans have gone back to work. Kunanja. You should see how busy and focused we become as a country. Before the extension of the curfew to 9 o'clock, I'd go to CBD and watch. It was quiet and people were back to work and the productivity was quite high. Transport sector, and in terms of public sector and the impact in there, railway is gone, aviation is gone. We must talk about KQ travel at some point in time. The global disruption of the supply chain. Right now, we've realized, guess what? We can actually manufacture our own PPEs. Or PPEs used to be an accounting term. Now it's been taken over by doctors into protective equipment. And we realized, and actually, I think COVID-19 has helped us as a country reset and realize we don't need to import everything from China. I'm glad now there should be an entrepreneur thinking of manufacturing toothpicks. We stopped taking toothpicks out of China. At least we have an opportunity to re-engineer our manufacturing sector. But talking about manufacturing sector, I think I'd have expected the CS, and I'm hoping when the members of Parliament of the National Assembly discuss his speech and then on to the Finance Act, they'll actually look at serious incentives into the manufacturing sector, because we need to re-engineer and kickstart our manufacturing process. So we stop importing out of China and do some of the things locally.
Trying to break down the 2.7 trillion shilling budget with a deficit of about 800 billion, where will the money come from, knowing all too well that Kenyans have lost their jobs? There's been a bit of tax concessions here and there. Anthony Mudusi, a tax partner with Ernst & Young, is joining us on phone. Anthony, it's good to have you with us. Let me just get your preliminary thoughts on the 2.7 trillion shilling budget. Are we living beyond our means, or is it something we can sustain?
Good morning, and thank you for inviting me to this call. I think these are very tough times, and COVID-19 is clearly a black swan. None of us expected it. If anybody told you that there's foreseen that we'll have this kind of event some while ago, I think they'll be lying. So what we've seen in the current budget is the CS trying to balance the books. He's tried to put some austerity measures, reduced his estimates, but in my view, probably best guess. We don't know where this is going to end. Probably the revenue targets may not be met substantially. And what he's probably trying to do is put in his best guess and try and fund that through borrowing from banks or other bilateral institutions. But the reality is the disruption from COVID-19 has been substantial. A lot of sectors have been hit hard. You've been talking about the number of joblessness and how many people have lost their jobs, 1.7 million to date, most of those in the informal sector. And that will continue as this pandemic spreads and as the government tries to find ways of containing it. But the reality is we as a country will have to maybe perhaps reflect on the lessons we are taking from COVID-19 and ask ourselves, what do we need to do going forward to revamp our economy? What do we need to do to stop living in this kind of, almost I would say, trap whereby our manufacturing sector is declining. We are highly dependent on agriculture. Even when you look at agriculture, most of it is just crop production. We don't have a lot of manufacturing or adding value in that agricultural sector. So maybe this is a time to step back, and government needs to reflect and transform its operating model. Government needs to perhaps take advantage of technology, leverage on technology, and change how it operates, reduce the recurrent expenditures, reduce the headcount in the civil service so that it's more efficient, it's more cost effective, so that we can reduce the pressure on the tax collections, so that when any savings that come from that form of transformation maybe go towards the development of budget. And more importantly, we also need to take advantage of this and transform our economic model. Manufacturing, we have to reflect what do we need to do with manufacturing. How do we substitute all the imports that we do and manufacture those locally? How do we drive high-value manufacturing in Kenya and create all those jobs? How do we create an export model for our manufacturing sector?
Anthony, it's interesting that you bring that up because you see the CS himself says that almost all the sectors are struggling. How then do we spur growth in an economy that has been beat down by COVID-19? What should we be looking at going forward? Should we maintain the tax breaks that we've given people earning 24,000 and below to stay away from tax? Pay as you earn, should it be maintained at 25 rather than 30? Or should you somehow review it back to 30 at some point?
Actually, reducing taxes has been shown that it does actually drive fast economic growth. I think what we need, first of all, is to cross the river. Currently, we need to find ourselves on the other side of the river in terms of trying to protect livelihoods, in terms of trying to protect lives, and trying to really contain. I don't think 1 or 2 years we'll see any growth. It's just how we protect and find ourselves across the river. Once we cross the effects of this pandemic and everything starts opening up, international trade opens up, tourism comes back, our exports get out, we then have to take advantage of this time when we are containing everything and trying to cross this river. How do we then operate on the other side of the river? How do we fundamentally restructure how we do business as a country for the prosperity of Kenyans? And that is very critical. Otherwise, if we cross this river and go back to the status quo, I think it will be a lost opportunity.
How do we survive post-COVID-19 now?
Thanks, Trevor. I think I'll look at it from the economy. The first thing is reallocate funds from government ministries and departments, such that they absorb the full impact of the current revenue shortfalls. Cut back on non-essential recurrent budget expenditures, the travels, the entertainment, just cut the fat, Reallocate funds in 2021 towards various developmental projects. I'm really big on developmental expenditure, Consider giving a stimulus package through central bank where attractive loan facilities can be set up to mitigate the effects brought about by the pandemic. Then social transfers to vulnerable persons, laid off workers, people who are self-employed but in the informal sectors who are struggling. Use Huduma number. Use that. See, we got the data targeted. Use that. Okay?
Okay.
And then set up asset-backed loan facility
Yeah.
for businesses affected, be it the tourism sector, the agricultural sector, the transport sector, the aviation sector.
Yeah.
Set up a credit facility or what I call for where larger players can go in for payroll support
Yeah.
with the aim of reducing the job losses.
Okay.
And then initiate conversation with our foreign debtors regarding the existing repayment arrangement on the country's debt,
Yeah.
and propose a debt relief that allows the government to redirect funds to go towards the containment
Okay.
of COVID-19.
All right. Churchill, very briefly.
Without repeating what Philip has said,
Yeah.
I say post-COVID economic stimulus package a bit of a misnomer. And we don't know the severity or even the duration of COVID-19. So one of the things that we need to, even we are saying with individual basis or in corporate basis, that element of discretionary savings, not holding back whatever monies you have, and so as to ride the storm, because you don't know the duration of the COVID-19. And that also has to apply with the government. And I think yesterday, from one of the clips I saw of the CS, I think when he went to see the president with the governors, and there was a bit of a eureka moment, saying that I felt that he had a bearish outlook in the growth prospects, and that's quite key to see even the revision of whatever has to be done so as to be able to head us into the COVID-19 storm. So it's quite critical. The savings, where can we be able to reduce and get some savings going forward?
All right. Thank you for making time for us. Churchill Ogutu, Head of Research, Genghis Capital. Philip Mwema, Managing Partner, Anderson Tax. And also Anthony Mudusi, Tax Partner, Ernst & Young, was joining us on phone. There's a bit of feedback coming through. I don't know if we have time to read them real quick. We had asked you what you think should be the focus of the budget. And Jacob Abere says it is challenging this year, budget reading and implementation. I don't see it helping the common Oloiboloi. Case in point, I haven't seen effect of the Corona economic stimulus package at all. Let's see another one here. Engineer Lazaro says the parliament should now use their constitutional powers to force the treasury to allocate more funds to the health sector. We don't want mega project spree anymore. And Bugwa says most Kenyans also live beyond their means too. House rent is high, food is high, transport is high, households' debts are sometimes bigger than their income. They live on borrowed money.